to halftime. Let's get to our chart of the day. Look at this one. Chipotle shares taking a real big hit after lowering its sales outlook as consumers, they cut back on dining as they're feeling the pressure from inflation. Shares down more than 14%. Steph Link, you sold out of this one. You got out. You don't like burritos? What's going on?
Mea culpa. This has been a problem for a while. I've been fighting it. I was looking for anything to be positive last night. Anything at all. There was not anything to be positive. They missed on the revenue number. They guided down same-store sales for the third consecutive quarter. The operating margins missed. The restaurant margins missed. They've lost their way. I'm not sure this leadership team is the right leadership team. And I do not want to be emotional about it, but I truly believe it because since Boatwright has been there, they've done nothing but miss. So I sold out of it. That's one, and then I just don't feel good about it. I apologize to anyone who followed me into it. I actually am quite tempted in Starbucks, to be honest with you. I don't own Starbucks at this moment, but the turn certainly seems to be starting very early on. But the first positive comp in 2 years with a very good leader, that's on my radar screen.
Are you more Joe, are you more pro Brian Nickel or Starbucks?
Both.
Okay, that's a good answer.
So I think the question that you have to ask is this idiosyncratic with Chipotle, or is this the economy, the real economy, beginning to contract? Because some of the names that we hold that have done remarkably well, Royal Caribbean, Ulta, Garmin, they have all been punished this week. And Garmin, in their quarterly earnings call, they talked about the weakening that they're seeing from the consumer. Royal Caribbean, the same case could be made.
I think it's low and medium area of consumer. The high end.
Wouldn't that affect Starbucks then?
It could, but I think you get bailed out on Starbucks because you've got a CEO that's going to restructure.
Which is different than what you have with Scott Boatwright and Chipotle. Look, Chipotle, I think it's a combination of both. I do think low end is feeling the economic pressure, and they're losing that. They're losing that traffic at Chipotle. But I also could tell you, and this is boots on the ground, my kids and my kids' friends, they'll tell you the experience is different. They'll tell you maybe the food doesn't taste as good. They'll tell you that the environment, They'll tell you that the environment in the restaurants is not as what it used to be. Maybe the stores aren't as clean, but there's something that's different.
Well, Joe, you're hitting on something, Jim. I know you want to say something, but on the call, they talked about people 25 to 34 or 25 to 35. That's where they're seeing a lot of weakness. Is this also maybe you're talking about the real economy where AI is impacting some of their sales? Because these are younger people. Maybe they're displaced out the job market. These are the people that will go to Chipotle. If you're 25 to 35, this is an overgeneralization, but you're not packing your lunch. You go out to lunch.
Yeah, I think you could make that argument, but I think there's something more. Look, I think it's about the experience.
Okay.
Right? The experience.
Jump in, Jimmy. Brinker, you look at McDonald's, you look at Starbucks. I mean, there are signs that there are okay things in the environment. So I do think this is a big Chipotle issue.
I think there probably is an idiosyncratic issue, although my son eats there almost every day. But besides that, I think there's an obvious problem here that we're kind of not touching on, which is the government shutdown. This is what I believe, that all these people who are furloughed or working without pay and the knock-on effect of all the contractors who are not getting paid. And, look, there is going to be an effect from the shutdown. The good news of everything I'm saying, I thought about this when you were talking about the cruise lines just a second ago. The good news out of this is that at some point the shutdown is going to get resolved. So this should be temporary. Side note, let's get the shutdown resolved, guys.
All right, there we go. Link, another side. I want to give you credit for owning that one. I mean, you said, listen, anybody that followed you, you apologize. You own this one. I want to go to two other names that are consumer-facing that you're also selling. It's Deckers and Gap.
Yeah, and I did this last week. I haven't been on. So Gap, I was up double digits. I love the story. I love the management team. I like what they're doing with their brands and the creativity. Nothing wrong with the Gap. I just wanted to take the double-digit gains and call it a day. Deckers, they actually had a very good quarter. They actually had a double beat with Hoka, with UGG. Hoka, they actually gained 2 percentage points of market share. They had margins that expanded, earnings that grew 14%, total revenues 9%, gross margins expanded as well. So why did I sell it? I just don't think they lowered guidance to be conservative. I just don't think between now and the end of the year, the stock has a catalyst to move higher. That said, I might look at it in January with a fresh set of eyes because I do like the brands very much, and I like this management team as well.
All right, Decker shares pulling back just about 1% right now.